Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are down today. Dow Jones is down 0.3%. Nasdaq is flat. S&P 500 is down 0.1%. Russell 2000 is down 0.4%. Oil is up $1 to $68 per barrel. It's been climbing up a little bit. Treasury yields are down across the board due to jolts coming in lower than expected. We're going to talk about that. Let's move on to the heat map. S&P 500 heat map shows Eli Lilly down 5%. Industrials are down across the board. Financials are flat. Maxim is generally flat, except for Tesla is down 2%. Meta is down 1%. Google is up 1%. Let's read the daily article. Wall Street swings to losses as earnings weigh, Fed meeting in focus. The S&P 500 and Nasdaq slipped from record highs on Tuesday as a series of downbeat earnings weighed on the indices, while investors looked ahead to the U.S. Federal Reserve's policy meeting later in the day. The Dow Jones Industrial Average fell 200 points to 0.4%. Quarterly results from key Dow components, United Health and Boeing, failed to impress investors. Health insurer United Health fell 5% after a disappointing profit forecast, while Boeing lost 4% despite reporting a smaller second quarter loss. United Health stock has lost nearly half its value from the beginning of 2025. On the day, healthcare index lost 0.4%. Meanwhile, UPS became the latest victim of U.S. President Donald Trump's sweeping tariffs as the stock tumbled 9% after the company reported lower than expected second quarter profit. Similarly, Whirlpool sank 11% after home appliance maker slashed its annual earnings forecast and dividend, citing tariff-centric pressures. Zachary, thanks for reposting the stream. Appreciate it. Greg says Tesla will be a huge company. It's already a $1 trillion company. I don't know how. We'll see about that. The week had started on firm footing after the US-EU trade deal that halved tariffs to 15% and boosted expectations of more agreements ahead of Trump's August 1 deadline. Trump has also floated the potential world tariff of 15 to 20% for non-negotiating countries. Key negotiations between the US and China entered their second day in Stockholm as the world's two leading economies aim to resolve their trade conflict and could possibly produce a 90-day extension to the tariff truce brokered in May. Meanwhile, India prepared for higher US tariffs, potentially as high as 25%, on some exports, as it opts to hold the line on new trade concessions ahead of Washington's deadline, according to two Indian government sources. The IMF was examining details of the trade agreements in the US has struck in recent days to assess the economic impact. Earnings from tech heavyweights Meta, Microsoft, Amazon, and Apple are scheduled later this week and could potentially steer Wall Street in the following days. For Mag 7 names, it's going to be all about the CapEx spend. That AI spend continues to be pretty robust. The market's going to take a lot of direction from that, said Jack Janowitz, lead portfolio strategist at Netsys Investment Managers. The U.S. Central Bank is set to begin a two-day policy meeting later in the day. While the Fed is expected to leave rates unchanged on Wednesday, traders will closely analyze policymakers' remarks to gauge the timing of future moves. According to CME Fed Watch Tool, markets are pricing in about a 62% chance of a rate cut in September. It's almost 2-1. All right. By the way, I changed my microphone. Zachary, thank you very much for the $5 tip. I put Zachary's money in good use and upgraded the microphone. And hopefully the sound quality is a little better today. Thanks, Zachary. Appreciate that. All right. Tesla's ability to sell cars in California hangs in the balance after a week-long high-stakes court hearing. Tesla's ability to sell cars in California hangs in the balance after a week-long court hearing that ended on Friday. The company's terminology for its driver assistant technologies is under scrutiny. California's DMV sued Tesla in 2022 and is seeking to suspend Tesla's ability to sell cars in the state for at least 30 days and award consumers monetary damages. Following the hearing, no final ruling has been made. The DMV suit alleges that the company falsely advertised its full self-driving and autopilot driver assistance technologies, misleading consumers into thinking the cars were more autonomous than they were. The hearing comes at a pivotal moment for the company. Its sales have slumped in the first half of 2025, and its brand took a hit earlier this year after CEO Elon Musk became the face of White House Doge office. Protesters directed their anger at Tesla, organizing nationwide protests at Tesla dealerships in March. Representative for Tesla did not respond to a request for comments. Another legal issue for Tesla emerging. Pomeranz law firm investigates claims on behalf of investors of Tesla Inc. This came out yesterday in New York from New York. This law firm is investigating claims on behalf of investors of Tesla. Such investors are advised to contact Danielle Payton at the number that you see. The investigation concerns whether Tesla and certain of its officers and or directors have engaged in securities fraud or other unlawful business practices. On June 22, 2025, Tesla debuted its robotaxi service with a highly publicized launch event in Austin, Texas. Then on June 23, 2025, Bloomberg reported that the U.S. National Highway Traffic Safety Administration, NHTSA, had contacted Tesla after numerous videos posted online appeared to show Tesla robotaxis driving erratically and violating traffic laws. On news of the NHTSA investigation, Tesla's stock price fell sharply, damaging investors. So we'll keep an eye out on this lawsuit. It's not the first time that Tesla has been sued, but sometimes these things take a turn. More on the competition front. I thought this was pretty interesting. NIO's Firefly becomes first compact car to achieve top-tier crash test rating in China. So this car in China is selling for about $17,000, $17,000, and apparently has 9 airbags, more than the Model S-Class Mercedes. And apparently it did better in crash testing than even the updated Tesla Model 3. So let's kind of take a look at this real quick. Chinese automaker NIO produced 800,000 vehicles in China in 7 years and 2 months after its first EV rolled off the production line. NIO kicked off the production of its first model, ES8, in 2018. We're going to skip that part. Envoy L90 is a full-size SUV. This is a different vehicle. We'll get back to, I'm going to discuss this tomorrow with more information. Let's move on to Waymo, introducing our next city, Dallas. So Waymo is expanding to Dallas. Waymo is coming to Dallas in 2026. We are thrilled to serve even more riders in the Lone Star State and bring the magic to Waymo ride-hailing to the city next year. Dallas offers a vibrant downtown bustling metro area well suited for 27 autonomous ride-hailing service. So I guess they're starting for 24/7. Whether catching Mavericks game, etc. And they're partnered up with Avis. Waymo will offer a ride-hailing service to the public through the Waymo app. So not Uber, Waymo app. And our fleet will be managed through a new strategic multi-year partnership with Avis Budget Group, a leading global mobility solutions provider. Avis brings decades of fleet management expertise, a track record of fast, efficient execution, and a commitment to adopting cutting-edge technology, which will help us scale the Waymo Driver even faster. Avis will provide end-to-end fleet management services, including infrastructure, vehicle readiness, maintenance, and general depot operations. This is an exciting initial phase in Dallas, and we intend to expand to more cities together over time. Let me see if there's anything else in here. Waymo serves over 250,000 paid trip drivers, millions of miles. Okay, so Waymo is continuing to expand, partnering with Avis in Dallas and not Uber. Let's move on to Shanghai on more autonomous vehicle news. Shanghai accelerates autonomous driving rollout with full opening of Pudong test roads by year-end. On July 28th, during the 2025 World Artificial Intelligence Conference, Director of the Shanghai Municipal Commission of Economy and Information's Auto Industry Division revealed in an interview that Shanghai aims to fully open its all autonomous driving test roads in Pudong new area by the end of the year, while also expanding access in other districts such as Fangshan and Minhan. Notably, the plan excludes heavily congested areas In Minhang, the rollout will cover key hubs. Functions opening will focus on targeted scenarios due to its currently underdeveloped autonomous driving ecosystem, aiming to connect existing test areas through newly accessible roads. And the companies that they're starting with are Pony AI, Baidu, and SAIC AI Lab. On July 26th, during the WAIC 2025, Shanghai issued new demonstration licenses for intelligent connected vehicles, allowing companies such as Pony AI, Baidu, and SAIC to begin charging for autonomous ride services in core urban areas. So no Tesla and no Waymo. Simultaneously, Shanghai released a special action plan targeting more than 6 million L4 autonomous passenger rides and over 5,000 kilometers of open roads by 2027, with over 90% of new vehicles supporting L2, L3 assistant driving capabilities. All right. So autonomous vehicles are going global. There are many Chinese players at it. I mean, this looks like a Waymo vehicle with LiDAR and everything, as you can see. So we'll keep an eye on that. We have two company-specific news and a Fed article. Spotify CEO defends slower price hikes. A lot better to keep the customer around. Spotify's dismal quarterly earnings report has raised questions over whether the company should raise prices at a faster pace than it has previously to boost its margins. On the company's second quarter earnings call Tuesday, executives responded to an analyst question on why the company wasn't raising prices as quickly as competitors. CEO defended Spotify's measured approach to price increases, saying the strategy reflects a long-term focus on customer retention rather than a short-term financial gain. It's a lot better to keep the customer around for a longer time than to lose the customer and try to reacquire the customer back at a later point, CEO said. At scale, the subscription business is really around retention, not new customer acquisition. The stock fell more than 10% following the quarterly report, retreating from a record rally after the company posted a Q2 loss. I mean, this is a bullshit response right here, right? This is a bullshit response. Because obviously, any CEO in the world would rather have both retention and higher prices. So it just says they don't have the pricing power that maybe others have, or maybe analysts thought that they had. So this is kind of like saying everybody wants a Tesla, you just can't afford it. It's just a bullshit response. X comments come as Spotify continues to test new pricing structures globally, following multiple rounds of increases in recent years. In mid-2023, the company rolled out broad price hikes across roughly 70% of its revenue base. That was followed by another round in June 2024 targeting U.S. subscription plans. As part of the latest changes, Spotify raised the monthly price of its individual premium tier by $1 to $11.99 and also introduced a $10.99 basic music-only tier in the U.S. The company also launched an audiobook-only plan and continues to experiment with bundled audio offerings in international markets. Investors have largely applauded the changes, which helped drive a 500 basis point improvement in gross margins over the past year in a stock rally of roughly 120% heading into Tuesday's report. But after the mixed second quarter report and softer Q3 outlook, some analysts are asking whether Spotify could move more aggressively, especially as rivals like Apple and YouTube raise subscription prices at a faster pace. Interesting. On the company's earnings call, Lightshed Partners analyst Rich Greenfield questioned why Spotify isn't raising price more aggressively in developed markets, noting that NBC's Peacock recently hiked price by nearly 40% despite limited user engagement. I mean, that doesn't sound very sound either. Eck pushed back, emphasizing that Spotify's pricing strategy is more nuanced, focused on segmentation and product expansion to balance monetization with long-term user retention. Still, Spotify's gross margins dipped to 31% in Q2, 31.5% in Q2, down slightly from 31.6% in Q1 and below the record 32.2% hit in Q4 2024. The company now expects margins in the current quarter to fall to 31.1%. Okay, I mean, this is the problem right here. So it's the guidance on margins is why the Spotify stock is down so significantly, due to in part regulatory costs and renewed licensing deals with major music labels. Yeah, I mean, margin is a story I'm watching in Q2, Q3 results. Now let's move on to a more macroeconomically important company. UPS falls as courier withholds outlook on trade economic woes. UPS shares tumbled after the company said economic volatility continues to roil its operations, underscoring the challenges for the courier's effort to reconfigure its network and revitalize its business. The company declined to provide revenue or operating profit forecast for the full year as it reported earnings for the most recent quarter, citing broader macroeconomic uncertainty. Among the challenges UPS called out were U.S. trade policies slashing shipping volumes from China, its most profitable trade route, and sluggish progress in reducing the size of its workforce. It's the second quarter this year in which UPS declined to provide investors an updated sales and profit card guide, which is unusual. That's unusual. But they also have some challenges from, I think, Amazon cutting back on their orders. So sentiment was decidedly negative prior to Tuesday's earnings report, wrote JP Morgan. The results and lack of guidance will do little to change that at this point. UPS shares fell as much as 10% as of 11:46 a.m. in New York, the most intraday since January 30. The stock had declined 19% this year through Monday's close, while the S&P 500 gained 8.6%. The Atlanta-based courier is struggling to recapture the volume it saw during the early years of the pandemic, when consumers turned to online shopping while stuck at home. The calm down, exacerbated for UPS by the threat of a union strike that sent some customers to rival firms, has proven stubborn thanks to weak demand across the economy. The company is also grappling with deep-rooted issues such as too much unprofitable volume and high costs. The overall U.S. economy demonstrated continued resilience, but our sector, specifically the U.S. small package market, was unfavorably impacted by U.S. consumer sentiment that was near historic lows, CEO said on the conference call. The company did offer limited predictions around capital expenditures. Who cares? All right, next and final article. The Fed's two-day policy meeting kicked off Tuesday. What you need to know. The Federal Reserve kicked off its two-day policy meeting Tuesday. The Fed is widely expected to keep its interest rate 4.25%, 4.5%, the same has been since December. President Trump has demanded the Fed cut rates, but officials have resisted doing so, partly out of concern that Trump's tariffs will push up inflation. So we're going to talk about this quite extensively tomorrow. I might actually have a live meeting going on, live cast going on during the Fed meeting, so we can go through it together. And then I'll probably also publish a video on my YouTube channel going over some charts heading into tomorrow's meeting. So that could be tonight. All right, everybody. Thank you very much. And I will chat with you all next time. Take care.